Crypto regulations across the globe. 2024 update. What's up everybody, it's Hasnain here and welcome back to the channel. Today we're diving deep into a topic that's super important for anyone even thinking about crypto regulations. Look, I get it. Crypto was supposed to be the Wild West of finance. No rules, just pure decentralized freedom. But as more people got involved, governments started to take notice. Now regulations are everywhere. But don't freak out, it's not all bad. In fact, some regulations are good for crypto. So, in this video, we're breaking down the global regulatory landscape, what it means for your investments, and what you need to watch out for in 2024. Okay, let's be real. Crypto has had its fair share of issues. We've seen crazy volatility, rug pulls, scams, hacks, you name it. All this chaos made governments nervous, and frankly, it should make you nervous too. Look, I'm all for personal freedom, but when things get out of hand, people lose money, and sometimes it's a lot of money. That's where regulations come in. They act like guardrails, preventing the worst actors from taking advantage of the system and protecting everyday investors like you and me. Think about it. Would you invest your hard-earned cash in a market with zero rules, where anyone could create a token out of thin air and disappear with your money? Probably not. Regulations bring much-needed stability and trust to the crypto market. They help prevent market manipulation, money laundering, and other illegal activities. And that's a good thing for everyone. Plus, clear regulations can actually attract more institutional investors. These guys are sitting on trillions of dollars, but they're hesitant to jump into crypto because of the uncertainty. Regulations can give them the confidence to finally enter the market, bringing in a massive wave of capital and legitimacy that could send crypto prices to the moon. So yeah, regulations are kind of a big deal. Now let's talk about the United States, the land of opportunity, and apparently the land of regulatory confusion when it comes to crypto. Right now it's a bit of a mess. We've got different agencies trying to regulate crypto in different ways. You've got the SEC, the CFTC, the IRS. It's like a bowl of alphabet soup and no one knows what the recipe is. The SEC, for example, wants to classify most cryptocurrencies as securities, which would put them under their strict oversight. But here's the thing. Many crypto projects don't fit neatly into the SEC's traditional definition of a security. This has led to lawsuits and uncertainty, with companies like Ripple and Coinbase fighting tooth and nail to clarify their legal status. Meanwhile, the CFTC sees some cryptocurrencies like Bitcoin and Ethereum as commodities, kind of like gold or oil. They want to regulate the derivatives markets, which is where things get really complex. The bottom line is that the US needs to get its act together and create a clear, comprehensive regulatory framework for crypto. Otherwise, we risk falling behind other countries and stifling innovation in this rapidly growing industry. Now, let's hop across the pond to Europe, where things are a little more clear-cut. The European Union has been hard at work on something called MiCA, the Markets in Crypto Assets Regulation. MiCA is a big deal because it aims to create a single, unified regulatory framework for crypto across all 27 EU member states. That means one set of rules for everyone, which is a breath of fresh air compared to the fragmented approach in the US. MiCA covers a wide range of crypto-related activities, from issuing and trading crypto assets to operating crypto exchanges and providing custody services. It's designed to protect investors, prevent market abuse, and promote innovation. One of the key aspects of MiCA is its focus on stablecoins, which are cryptocurrencies designed to maintain a stable value, usually pegged to a fiat currency like the US dollar. MiCA will introduce strict requirements for stablecoin issuers, especially those with large market capitalizations. Now, MiCA is expected to be fully implemented sometime in 2024, and it'll be interesting to see how it impacts the crypto landscape, not just in Europe, but globally. Many experts believe that MiCA could become a global standard for crypto regulation, with other countries potentially following suit. So yeah, keep an eye on Europe, they're making big moves in the crypto world. Alright, let's head over to Asia, home to some of the most active crypto markets in the world. But when it comes to regulations, Asia is, well, a mixed bag. You've got countries like Japan, which has embraced crypto with open arms. They were one of the first countries to regulate crypto exchanges, and they even recognize Bitcoin as a legal form of payment. But then you've got China, which has taken the complete opposite approach. They've banned crypto trading and mining, cracking down hard on the industry. It's a reminder that governments have different views on crypto and its role in the financial system. Now let's talk about India. They're a huge market with massive potential for crypto adoption, but their stance on regulation has been, well, let's just say unclear at best. The Indian government has been going back and forth on how to regulate crypto, leaving investors and businesses in a state of limbo. On one hand, they've imposed a hefty 30% tax on crypto gains, ouch! But on the other hand, they haven't provided a clear regulatory framework for the industry to operate within. So, it's a waiting game in India. Will they embrace crypto or push it away? Only time will tell. But one thing's for sure, what happens in Asia will have a ripple effect on the entire crypto market. Now, let's shift our focus to the Middle East and Africa, two regions with incredible potential for crypto adoption. In the Middle East, the United Arab Emirates, specifically Dubai, has been making headlines as a crypto hub. They've been actively developing clear and welcoming regulations to attract crypto businesses and investors. Dubai's goal is to become a global leader in the crypto space, and they're off to a strong start. They've established special economic zones with crypto-friendly regulations, and they're even working on their own central bank digital currency, or CBDC. Meanwhile, Africa is experiencing a surge in crypto adoption, driven by factors like limited access to traditional financial services and high inflation rates. Cryptocurrency offers a lifeline for many people in Africa, allowing them to send and receive money cheaply and easily, even across borders. However, regulations in Africa are still in their early stages and vary widely from country to country. Some nations like Nigeria are exploring blockchain technology and its potential applications, while others are taking a more cautious approach. The key takeaway here is that the Middle East and Africa are regions to watch in the coming years. As more people gain access to smartphones and the internet, crypto adoption is likely to explode and regulators will need to adapt to keep up. Let's move on to Latin America, a region that's been hit hard by economic instability and inflation. And guess what? Crypto is stepping in to offer solutions. Take El Salvador, for example. They made history in 2021 by becoming the first country in the world to adopt Bitcoin as legal tender. It was a bold move that sent shockwaves through the global financial system. While El Salvador's Bitcoin experiment has faced its share of challenges, it's a testament to the growing appeal of crypto in a region hungry for financial alternatives. Other countries in Latin America are also embracing crypto. Brazil, for instance, is home to a thriving crypto market and is working on regulations to foster innovation while protecting investors. Argentina is another interesting case. With sky-high inflation rates plaguing their economy, many Argentinians have turned to stablecoins, particularly those pegged to the US dollar, as a way to preserve their savings. Latin America shows us that crypto isn't just about speculation or making a quick buck. It has the potential to provide real-world solutions to real-world problems, especially in regions with limited access to traditional financial services. Now let's talk about a trend that's gaining serious traction: worldwide central bank digital currencies, or CBDCs for short. CBDCs are basically digital versions of a country's fiat currency, issued and backed by the central bank. Think of it like a digital dollar, euro, or yen. Many countries are exploring CBDCs as a way to modernize their financial systems, increase efficiency, and reduce costs associated with traditional payment methods. But here's the catch. CBDCs are different from cryptocurrencies like Bitcoin. While cryptocurrencies are decentralized and operate independently of governments, CBDCs are centralized and controlled by the issuing central bank. This raises concerns about privacy and government control. With a CBDC, the central bank has complete visibility into every transaction you make. Despite these concerns, CBDCs are here to stay. They're going to play a major role in shaping the future of finance, and their development will likely influence how cryptocurrencies are regulated in the years to come. Okay, so we've covered a lot of ground. But here's the thing, regulating crypto on a global scale is incredibly complex. One of the biggest challenges is creating a unified approach. Right now, it's a patchwork of different regulations from country to country. What's legal in one place might be banned in another. This fragmentation creates headaches for businesses and investors, making it difficult to navigate the global crypto landscape. Another challenge is defining what crypto assets actually are. Are they securities, commodities, currencies, or something else entirely? Different countries have different interpretations, leading to confusion and legal battles. And then there's the issue of innovation. Crypto is all about pushing boundaries, but overly strict regulations could stifle innovation and drive companies and talent to more crypto-friendly jurisdictions. Finding the right balance between protecting investors, preventing illicit activities, and fostering innovation is a delicate dance, and it's something that regulators around the world are grappling with. So, we've talked about the global regulatory landscape, but what does it all mean for you as a crypto investor? Well, first and foremost, you need to stay informed. Crypto regulations are constantly evolving, so keep an eye on the news and any announcements from regulators in your country. Second, understand the risks. Crypto is still a volatile asset class, and regulations, while providing some protection, don't eliminate all risks. Third, diversify your portfolio. Don't put all your eggs in one basket, especially when it comes to crypto. Spread your investments across different asset classes to mitigate risk. Fourth, consider the tax implications. Crypto gains are often taxable, and the rules vary depending on your location. Consult with a tax professional to understand your obligations. And finally, remember that regulation is a double-edged sword. While it can bring stability and legitimacy to the market, it can also lead to stricter rules and reduced anonymity. As we've seen, the world of crypto regulation is constantly evolving. It's a complex and often confusing landscape, but it's essential to stay informed and adapt as new rules are implemented. The good news is that regulators are starting to understand the importance of clear guidelines for the crypto industry. They're learning from each other's successes and failures, and we're likely to see more harmonized regulations in the future. Crypto is here to stay. It's already changing the world as we know it, and its impact is only going to grow in the coming years. By staying informed, adapting to change, and investing responsibly, you can navigate the exciting world of crypto and potentially reap the rewards of this revolutionary technology. Remember, knowledge is power. The more you understand about crypto regulations, the better equipped you'll be to make smart investment decisions. So, stay curious, stay informed, and keep exploring the incredible possibilities of the crypto world. That's it for today's video. If you found this breakdown of global crypto regulations helpful, hit that like button, subscribe to the channel for more crypto content, and smash that notification bell so you don't miss any future updates. Now I want to hear from you. What are your thoughts on the current state of crypto regulations? Are they too strict, too lenient, or just right? Let me know in the comments section below. Thanks for watching, and I'll see you in the next video.